Good morning and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin and I am here with my father, Carl Swenlin from DecisionPoint.com. And we are here to look at the symbols that are interesting to you right now. We're going to give you a market update. I'm going to go through the sectors and we'll look at some industry groups and see how they're trading. And as I said, we'll finish with your symbol requests. So let's go ahead and jump in. Dad, you're going to do the market update. So let me just have you do that, as well as I know we're going to talk about the bias in the market right now.
Let me start with the SPY at the current time. Started out strong this morning. Now it's up about 1/3%. PMO is right on the signal line, basically got a top above the signal line. And my guess is that we're not going to see a higher high, higher than this high here. So before it starts back down. And here is one of the reasons. We participate in a weekly poll as to what the market will do and what we think the market will do in the next week. And when I have to do that, I just immediately go to this chart. It's got our short-term indicators, the Swenlin trading oscillator for breadth and volume. And then we have the IT breadth momentum and IT volume momentum, which are an immediate term. And looking at them, you can see where the short-term indicators have been dropping. And as of Friday, they are still falling. And as of Friday, the intermediate term have topped and are falling. They top below the zero line. And this is a fairly common thing, although you see it's kind of down and then up. Here we have a change of direction. And this is fairly common over a period of time where you get different one bottom and then starts down and you get another bottom. And another one of the charts that we use is our bias assessment chart. And that basically shows the Silver Cross Index, which is the percentage of stocks with the 20 EMA above the 50 EMA. That's the intermediate term indicator. At this time, you can see the S&P 500 has 45% of the stocks with a silver cross, which is in bearish territory. The Golden Cross Index is a percentage of stocks in the S&P 500 that have the 50 EMA above the 200 EMA. And that is still at 60%, 61%, but it is also falling below the signal line. When we're looking at what we expect it to do in the near future, if we look at for the Silver Cross, we got the 20 EMA and 50, and the highest one is at 40%. So we would expect to see it drop at least another 45%, and probably going lower because there's 35% of the stocks with only above the 20 EMA. Same goes for the Golden Cross at 61. The highest number that we can expect would be it would drop to 51% and probably going lower than that. This brings up the discussion of bias. We have a new table we introduced, it's within the last month, called the bias assessment. And basically it's showing we do Silver Cross, Golden Cross indexes on all these indexes and sector industry groups. And it shows if the Silver Cross is below its signal line, that would be a bearish bias because it's declined enough to push it below that signal line. And the same with the Golden Cross, and it shows that a bearish bias shows that the 50 is below the 200. And you can see this is as of Friday. This is not a very pretty picture in terms of the bias of the market. With the bias being this bearish, we would expect it to go lower. Obviously, things can turn around in a moment, but it's more likely that it's going to continue in the way of the bias. Let's see, the only two at the current time with intermediate term bullish bias is gold miners and technology. Let's see, this in the sectors, we've got bull bias in a long time on energy and financials and technology. And technology is the only one that has a bull bias in intermediate term and long term. Let's go on to our market coverage. Okay, here's the US dollar topping out, headed lower by about a half a percentage point. That would affect gold positively, and that's up by a quarter of a percentage point. So it's not as strong as it should be because all things being equal, the gold should go in the opposite and equal direction as the dollar. But obviously, there are other factors to be considered. This is a good relative strength chart for gold versus the dollar. And basically, it's showing that that gold is weakening in relation to the dollar over this last couple of months. Crude oil advancing. We've got a flag formation here. I don't like this kind of flag formation. It's not as healthy as a flag that kind of dips back from the top and then it kind of building compression. And so flat doesn't have the compression there. It doesn't mean it's not going to go higher, but it's just weaker. It's a weaker forecast. Bonds trending down, not in a very fast, but it is trending down. Treasury bond yield, this is a 10-year, rallying. Right now we've got a top below a top, so we'd like to see that go higher if we want this yield to go higher.
Yeah, if the yield turns down there, it's going to set up a double top. So certainly something to consider.
Well, it'll be a top below a top, and then the next thing would be for this bottom to be exceeded. So then you have a new downtrend established.
Mm-hmm.
Here's the yield array that we keep up, and this is as of Friday, and it's been trending up since spring, and slowing down in some of the shorter term durations. It is inverted. Longer term, this is so dense it takes a little while to load. There you go. Mm-hmm. 1981, so at the high, you see that yields have been trending down over time. Finally, last year, they broke out of that long-term declining tops line. And essentially, I think this signals that yields are going to go higher. Don't know if it's going to be this high, but, we are really in a bad situation at this point, as far as I'm concerned, with the way Congress is spending money, and yields will probably trend higher. Not necessarily fast, and they'll be up and down, but I think they are going to higher. Don't want to forget Bitcoin not doing well. We had this little pop here when there was talk about BlackRock getting its own ETF for Bitcoin. That lasted very short period, and the downtrend looks as if it's continuing. This is the longer term chart where we can see where various lines of support and resistance originate. We have a rising wedge formation from which it broke down. So at this point, I guess actually you have to say it's right in here. It's in a sideways trend lasting for almost a year. But I think it's going over. I think that the heyday of Bitcoin and cryptos is over. That's my own opinion. Okay. The big tech group, Apple, has really harvested the results of trading with the Chinese. And the Chinese have turned against Apple because Apple's trying to move their production over to India. We know the news regarding that. Apple is going to, in my opinion, is going to have some hard days ahead. And I don't think buy the dip is appropriate. Amazon is not doing badly today. It's still, we've got this high to exceed to continue the rising trend. Google, Alphabet, we've really got a rising wedge situation here, so we would expect some point for that to break down out of that rising wedge. Meta Platforms also doing well today. We've got a double bottom here, short-term double bottom. It's still somewhere in this area where minimum upside target would be, and it's not making really fast progress toward that target. Microsoft made a bottom here, and it's trending upward. Good PMO configuration. We've got a saucer with handle situation. Here's the handle, and we're coming out of that now. So fairly good prognosis on that. Netflix rallying earlier today. We had a head and shoulders pattern here, which executed and it was complete, quickly abandoned. So I just leave this up here as a reminder that these patterns don't always pan out the way you expect them to. NVidia not having a good day, and we've got a rising trend line here, which is being challenged. As a minimum downside, I would expect it to get back to this rising trend line, and you notice where there's horizontal support in there. And finally, Tesla is having a really good day, 9%, almost 9.5% up today. Again, I don't see a great future for the EV industry. I think that ship has sailed. So Tesla is more than an EV company, and maybe that will pan out a little better for them. But I don't have a good feeling about the industry. Okay, energy. This is what I wanted to show too. Yeah, energy's it's a little down today, and this is new. This is a new all-time high. And again, I want to look at the monthly on this. You can see it's actually done very well over the last couple of years and making new all-time highs. And that kind of surprised me, which shouldn't have, because I should have been looking at the monthly on this too. Okay. Let's see. Have I forgotten anything?
I think you actually covered everything plus some. I do notice you have UNG up there.
Yeah, I might as well get that. And it's still, this is a saucer formation, so maybe we're going to get moving higher. The Biden is cutting off oil and gas drilling in Alaska, so that would put pressure on prices for oil and gas.
Right.
That's what I'm waiting for.
You and me both.
Okay, so I will turn it back to you.
Okay, very good. That was an excellent update. All right, let us move on. So I'm going to cover the sectors. We'll look at some of the industry groups if we have time. I think that it's concentrating on energy is a good idea, since we did just bring up that chart. And the other one to look at, I think, would be technology, since it is the only one with a bullish bias in the intermediate and long terms. Past that, I'm looking for new momentum here, and I'm not really seeing too much new momentum. Consumer discretionary looks very interesting. It was looking interesting to me on Friday as well, but I hadn't seen enough improvement, and I didn't like the candlestick that it formed on Friday. You can't see it too well here. I apologize, but it was a shooting star type of candlestick. So I have to say, though, it looks like discretionary is going to go ahead and make that move higher. So this looks like a pretty interesting sector right now. We also see financials are trying to get a PMO crossover buy signal, not successful yet. And then we have utilities here, which now have a new crossover buy signal for the PMO. So a couple of these that we should concentrate on. Let's go ahead and we're going to start with consumer discretionary. So we have a really nice gap up move. Of course, that does leave us vulnerable to a gap down move in the future. So we do have to be aware of that. But I like the way the PMO is accelerating higher. I do need to see better participation under the surface, though. This is the percent of stocks above their 20, 50, and 200-day EMAs. And you can see that that's really been trailing off. We saw on Friday a little bit of a bump here in participation, but not enough to me to warrant a big move like we're seeing today. So again, while I was interested in consumer discretionary on Friday, I wasn't seeing what I needed to see. What I'll need to see after the close before I would be comfortable in this area would be an expansion of stocks above their 20-day EMA. That would just give us a better idea as to, how broad this rally is within consumer discretionary, or is it really just the top couple of stocks within? Energy. So we did hit that all-time high. I wrote an article. It's a free article, so you can find it in the DecisionPoint blog on StockCharts.com, or you can go to our blogs and links page on DecisionPoint, and you'll find that free article. But I was talking about, should we worry now that it has hit all-time highs? I think based on crude oil more than likely continuing higher and rallying, that energy is still going to do okay. The big problem I have is that we do see the Silver Cross Index has dropped beneath its signal line. That's a bearish shift. And that does give us a little bit of pause right now. But still, we have very good participation under the surface. I would like to see more than 82%, though, with the price above their 20, because otherwise we're going to start to see a little bit of deterioration coming in here. The more these 20-day EMAs drop below the more price drops below 20-day EMAs, the more vulnerable some of these signals are, these silver crosses that we already have within energy. So I'd like to see a little bit more participation, but overall, I don't think we have to really worry about energy right now. We just need to be aware that with the Silver Cross Index this high, there's really nowhere else for it to go but down. So we need to keep a close eye on that, because if we really start to see that Silver Cross Index deflating, then that would be our signal that maybe we need to tighten up stops in any case on energy positions. I think you're pretty safe right now. Financials, getting ready to have that PMO crossover buy signal, but really in a trading range, we do have kind of a cup with handle shape going on here. But look at the participation. It's still trailing off. It really doesn't suggest that we're going to get a big breakout here in financials. So not that I don't trust my PMO, it's not bullish enough. All right, materials, flat PMO. That wasn't one I wanted to look at. Technology and utilities, yes. So technology currently does have a bullish bias in the intermediate and long terms. And this is why. The Silver Cross Index is above its signal line. So that gives us an IT market bias, or not market bias. That gives us an intermediate term bias that is bullish because it's above that signal line. The Golden Cross Index is also above its signal line. And so that's why we have a bullish bias in the long term for technology. It looks okay to me right now that, we have these shifts above the signal lines here for the Silver Cross Index and the Golden Cross Index. But this is a bit of a problem. This is not gaining strength. We're losing strength here in participation. And even Friday, we lost some strength and participation despite having a rally on Friday. So there are problems under the surface here for technology. Notice also that relative strength of technology is starting to peter off as well. So we have a rising trend. It's still intact, but I think we need to be, unlike with energy, I don't think we need to worry so hard. Technology, it is a bullish bias, but it really looks like we're going to shift into a bearish mode, basically because we're losing the participation under the surface. Doesn't help that stochastics have topped. And like I said, relative strength not looking good. The surprise out there is utilities. And you can see the new PMO buy signal for utilities. It's bounced off of, it broke down below this level of support here, which was a little bit of a surprise to me. It looked like we were getting a rally off those lows, but instead we dropped down below that support level. But before it hit the next support level, it reversed, and that's a good sign. It didn't have to test that support level before turning up. We now have price above the 20-day EMA. If the market is going to struggle, which are market indicators that you saw at the beginning of the show, if we're going to start to see the market struggle, we're going to probably see the defensive areas of the market start to lead. And they're not very exciting areas. Utility is not a very exciting area of the market. But look at the way the participation is building here. This is a totally different look from the charts we were looking at earlier. The only one that's even close would be discretionary, where we are seeing some expansion in participation. But for utilities, all of this looks very good. Stochastics are in positive territory and rising. And you can see, unlike technology, that relative strength is starting to build in utilities. So if there's an area of the market that I would be paying close attention to as far as new momentum goes, it would be utilities. Let's look in the industry groups for utilities and discretionary, because that was pretty interesting, seeing that nice move in discretionary. So here are our industry groups. This is for consumer discretionary. I'm just going to click through. This is the PMO on the bottom here, stochastics, and this is relative strength. So it gives us an idea of where we might want to be if we're going to be in discretionary. Auto parts, PMO topping. Not bad here for autos. That probably is a large part due to Tesla this morning. Nothing exciting there. So far, I'm not seeing anything particularly exciting. So really, it looks like consumer discretionary is looking good, primarily on the back of automobiles industry group. Although I have to say this looks pretty interesting for home construction right now. The rest of these, I'm not really that excited about the look of. Hotels looked like we were getting a nice rally, but it's now trading on the lows for the day. Broadline retailers, we have a new PMO buy signal. Broadline retailers, I do believe that includes Amazon, so that could be part of it going on there. Amazon having a good day. Specialty retailers look okay. Travel and tourism, nice PMO buy signal, so that might be an area to concentrate on. Toys looking interesting with the flag formation. It looks like it's getting ready to be confirmed. Tires look terrible. Yikes. So that gives you an idea of some of the areas that are looking good in the financials. But what looks good in utilities? If I recall, just about everything's looking pretty good in utilities. Gas distribution, price pattern not looking that great, but the PMO is turning up. Stochastics have turned up. Multi-utilities really seeing the big jump on the rally here. PMO buy signal, stochastics rising strongly. So multi-utilities look pretty strong here. Conventional electricity is now rallying above its 20-day EMA, new PMO buy signal. And water also seeing a nice rally today. So utilities seem to be showing us a lot of new momentum. I liked the look of multi-utilities best. If we wanted to go in and look for some stocks within that area, we just go down to this little button under the chart, and that's going to bring up all of the multi-utilities that are covered here at StockCharts. And you can see the ones, if we organize by scooter, the ones that have the best look more than likely are moving to the top. You can see that one is still continuing higher. Genie does not look good. ELP looked interesting, but this is a way you can go in and find some charts that maybe are interesting you. Q&A box is pretty full here for symbol requests, so I think I'm going to get started on those. So I can see those in there too, just to make sure I get those symbols right. All right, let me widen this screen there a little bit. You should be able to see the whole chart in the screen right now. All right, so installed building products, heavy construction. Well, interestingly, we did just look at home construction as an industry group, and it was looking pretty good. I have to say heavy construction here, not looking that great. PMO has dropped beneath the 0 line. This is, I can look at this and tell you I would not want to be long on this, just straight out the gate. We have a rounded top. Like I said, PMO moving below the 0 line, stochastics below 50. Not a buy. If we're talking about holding, let me get my little inspect tool going here. So this is your support level. You can see lands on this particular low and these lows. That's where I'd want my stop. I would probably not be holding this still because the PMO has been in decline for so long. I tend to get rid of a stock, maybe not on a crossover sell, but certainly if things are going in the direction they were going here. But if you still have it.
Look at the OBV.
Yes, that's interesting.
Reverse divergence.
Yeah.
You got all that upside volume, cannot push the price up.
Right. Not good. Let's see. So there are a lot of problems with this chart, relative strength as well. So I'd have to say, if you owned it, I could see holding it, but I'd want a tight stop below that support level at about 3.25% at the most. But I think that you had an excuse to sell this a long time ago.
CHEK as a buy.
All right, now we're talking. A big move though, 9.75%. That's always really hard to jump into when I'm looking at a stock like that. I'm always, the first thing I'm going to do is look at it for a pullback, and certainly we'll take a look at the 5-minute chart to give us a little bit of a hint as to how we would get in. But this is a good looking chart. We have a breakout above the 200-day EMA. We have a strong RSI. We have the PMO buy signal. It's still headed upward. And in fact, when I look closely here, it's accelerating upward. And we have stochastics above 80. All of these things are going well. It's in a group that's not doing so well, but it seems to be okay because it's outperforming that group and then certainly outperforming the S&P. So I do like this particular chart. So let's go ahead and look. Let's first look at the weekly. And this needs to go log scale. There we go. So it looks like a reverse head and shoulders heading up, trying to form here on the weekly chart. So that's good news. And the PMO looks pretty healthy. So like all of that, this is a pretty good stock. And then here is the 5-minute chart. And this is where we go to time our entries and exits. So what we want to do for an entry is look for a 5-minute PMO that is making a positive crossover in conjunction with a positive RSI. If both of those things are going the right way, it's a buy point. So our last buy point came, well, our last one came in here. The one before that, the best buy point obviously was back here on Friday. But today we got a good buy point coming in on this particular candlestick. So we were really set up to see prices move higher. If you had been looking at this chart earlier today, you could have gotten in on quite a move. Be careful. I just noticed that this is a really low price stock, and that carries with it a lot of risk. Just make sure you position size carefully. You can buy a ton of shares when they are this low price, but maybe you don't want to get yourself too sunk in there. As far as a buy point today, I'm not seeing it. The PMO is still above its signal line. Does look like it's pulling back a little bit off of some of these highs, so you may end up getting in a little bit better. But waiting around is going to be a little bit tricky because that PMO is still moving upward.
You know what I hate about this chart is it's what I call toothless. It's got so many gaps in it. And
Yes.
it's just it's no consistency.
There's a little better on the 15-minute.
Yeah.
Or the 30-minute. That's a parabolic move. So we should expect a breakdown here to come in that you would be able to take advantage of. It's just the PMO is really rising strongly. So I don't know if that's going to actually happen today, but it certainly would be worth watching this chart for, I would say. And again, this is the 30-minute. Good point that you can use these same guidelines for getting in a stock on a 15 and a 30-minute chart. It's whichever one makes you more comfortable. It's still the same thing, PMO buy signal and a positive RSI. So looking at this one and looking at the 15-minute chart, we're really not in a place to get a good buy point. We're very vulnerable with these parabolic moves to get a breakdown. So if you can hold off and wait and see, if you can get that better buy point, I think you might be able to do that.
HE, long term.
Let's get moving here. This chart, just seeing the big gap down, there's obviously something intrinsically wrong with this company, or
Hawaiian Electric, Erin. Hawaiian Electric.
that would be why. Certainly. Well, not taking that into account, just looking at the technicals, which is what I can do. This does look like a bottoming formation, but again, there is some problems intrinsically with that big decline. PMO is on the buy signal. This is a utility. I did say utilities look good, so I think you could take a chance here, mainly because that PMO is on the buy signal. But you might be able to find a stock that is showing a little bit better relative strength. You can see this is traveling in line with the group, which isn't a bad thing now that the group is starting to outperform. But you might want to see if you can't find one that is rising. But this one, I mean, given if we're going off the PMO and stochastics, RSI is negative, but it's doing its thing to get back up there. I think you could make a case to get in here. Let's look at the weekly chart. I don't think it's going to be that helpful. No.
You know, being in California, we see this here all the time, where we have wildfires, and there's usually electrical lines going through the area, and deep pockets, so they're a target all the time. And with the devastation in Maui, Hawaiian Electric's going to be under fire for a long time, and sued.
Yep. So similar to the PG&E situation that we had a couple of years ago. So something to consider for sure. I would be looking toward another utility.
CME.
All right. This is, let me get a look at this. It's kind of a lukewarm chart to me. I mean, we do have the PMO is rising, but it's getting ready to hit overhead resistance. RSI is getting ready to get overbought. We do see that the OBV is rising to confirm the current rally. We do have a bullish engulfing candlestick. It's just been a sideways trading range, so it's a little less exciting to me. But I think that it is certainly it looks good enough that you could enter. It's just really, it's new momentum. So just know that that's going to be offering you some extra risk in there, because we don't have really momentum to the upside, hasn't been established in a meaningful way at this point. Stochastics above 80. So yeah, I mean, I see this looking pretty good. The big problem is that overhead resistance. It's in financials. Financials didn't look too terrible on the sector chart. We're getting pretty much inline participation or relative strength on this industry group. Yeah, I think this one looks good. Let's go ahead to the weekly and then the 5-minute. Weekly looks very healthy, so I like that look. 5-minute chart, where would we get in? Looks like the PMO's topping, so you are going to get a better buy point if we wait just a bit longer. This also looks like a little double top formation, so I think you're going to get a better buy point if you wanted to get in this one.
ENVX for long.
All right. I like this move. I'm not thrilled with the candlestick right now. That's a filled black candlestick, and those are bearish formations, but it is breaking out of a tight trading range here. PMO is on a new buy signal. Stochastics rising almost above 80 there, or are they? Nope, almost above. RSI is negative, but of course it is, given what we're looking at here. I think your risk is that this could be a reverse flag sort of situation, but ultimately, and I don't like the fact that the industry group is suffering the way it is. You're getting pretty good outperformance. I mean, okay outperformance against the S&P. So that tells me there might be some better choices for you where we're going to see a little bit better outperformance. But I like this one on this little breakout from this tight little trading range. And if we look at the weekly, not a good weekly chart. PMO sell signal. And looks like you're not at the buy point. And if you keep an eye on this, when the PMO makes that turn and starts to turn up, and again, you'd like to see that RSI in positive territory, that would give you a pretty good buy point. I think you're going to get a better one if you wait a little longer.
SHW.
Sherwin-Williams. Forming a pretty decent base here, kind of a rounded saucer-shaped base. PMO is, boy, it's still in decline. So that always is, you know, I think most people know if the PMO is in decline, I'm not going to be hot to get the stock. But everything else is looking fairly good here on the chart with that base. I just would need the PMO to be turning upward. You can see it even turned up back here, and it was a fake out, and it topped beneath the signal line. So I think there's still a few problems in here. But I have to say, I like the fact that the EMAs are configured the way they are, because we've been looking a lot of stocks with a 50 below the 200, and that gives you a bearish bias. This actually has a bullish bias in the intermediate and longer term. So that's a good sign. Materials looking okay as far as a group goes. I mean, I like this. I'd say I like this minus the fact that the PMO is not turned up. That looks like a nice little flag formation on the weekly chart, so that's good.
Rounded bottom.
Rounded bottom on there. Buy point has already come in, so I don't know that you're going to get a better buy point if you wanted to get in today. This is about the best you're going to do. If we do see that PMO is decelerating a little, so maybe you'll get a little bit of a decline here. But I think this is a pretty reasonable buy point considering where it sits within the trading range of the day.
Okay, I have a comment here. Amazon and Tesla are 40% of XLY. And which one is that?
Consumer discretionary. So Tesla and are both in consumer discretionary. So I think the comment was, you know, part of the.
What the thing is that as strictly going by cap weighting, it may be, but these sectors, these S&P sectors are not strictly cap weighted. They have to back off because Tesla and Amazon have such huge market cap. There's no point in having anything else in the group. So I don't know if this is accurate, but yes, they do uh, make up a large part of that sector, but I'm not sure it would be 40%.
Well, and one of the good things about the indicators that we have is that it kind of strips that out, because we're looking at the percent stocks above their 20-day EMA. That's everybody's weighted the same on that. Everybody's weighted the same on Silver Cross Index and Golden Cross Index. So maybe we're getting this big gap up move and it's due to Amazon and Tesla, which makes complete sense, to be honest.
Right.
But at least we can look under the surface and say, well, consumer discretionary looks interesting, but we still don't have the kind of participation under the surface. So in a broader sense, yeah, consumer discretionary, maybe what we're seeing right now is just a matter of, part of the Magnificent Seven dragging things upward.
Yeah, if you own it today, you don't care
Right.
about that, but it's still, that's something that come back and haunt you.
Right.
GIS.
All right. Well, this one looks terrible. If you're trying, this one would be catching a falling knife. I mean, eventually it's going to have to make that move back upward, but this just looks terrible for General Mills. Consumer staples have really been struggling anyway. This industry group does look like it's starting to improve a little bit in its relative strength, but that is not doing anything because we've got a stock here that is really relatively underperforming its group in a big way. So I don't like this. I know if you might be looking at this as a bottom fish because the PMO is turning up, but it did that before. And you ended up with a huge decline even after the PMO had turned up. I would need way more confirmation to get in on this one. You certainly have time to figure it out because if it's going to reverse, there's plenty of upside potential there, but it just doesn't look ready to reverse yet.
Check the weekly.
Yeah. And I bet that's pretty darn ugly.
Oh, yeah.
Yeah. The next level it's dropped below this level of support on these tops. The next really strong level is down here. And I would say, looking at that daily chart, you're probably going to see it get close to it. So I would not be interested in General Mills, maybe on the short side, but then it's sort of like if you're trying to get on the buy side of something that's been moving up for a long time, you've already lost a lot of that short's value going down this far. So I don't know about shorting it, but I certainly wouldn't be a buyer here.
DI.
All right. Healthcare providers as an industry group are performing in line with the market. Looked like they were getting ready to outperform a little bit. Maybe they'll continue to. Certainly this stock is outperforming the market a little bit, so that's good. OBV is rising, but we do have a bit of a negative or reverse divergence here. We have all this volume that's come in and it's pushed past, the OBV is pushed past this area, yet we're looking at price and it hasn't been able to get back up to this area. So we have the volume coming in, but price isn't really reacting. It is now, so that's a good sign. And the PMO has turned up and is getting ready for a buy signal. But I did want to point that out. I do like this rally off of support here at the 200-day EMA. I think that looks really very encouraging. Also, the RSI is positive, so I'd give this one a thumbs up. Let's look at the weekly. The weekly chart looks good. You have the PMO surging above the signal line or bottoming above the signal line. We call that a surge. So the weekly chart looks good. So what do we do? How do we get in? We look at the 5-minute chart And it does look like we're arriving at a buy point right now. The PMO hasn't quite turned up, but the RSI is positive and price is certainly making its move way back upward. So I'd say an aggressive buy point is in with that positive RSI and PMO that's decelerating. But if you wanted to be a little more conservative, you want to wait for that PMO to turn completely upward and give you a crossover for that conservative buy point. But I would say this isn't going to be I would say this won't be a bad buy point. It's certainly below where we were trading earlier today.
AWK.
This is a utility. If you're going to go utilities, this is one of the big names there. It's got a pretty decent yield of almost 2%. PMO's turned up. We did get a big top beneath the signal line, though, earlier, so that does suggest there's internal weakness that needs to be overcome. The stochastics are also still showing some internal weakness below 50, so this would be an early one to get in on, but it does outperform its group typically, so if you're going to be in this particular industry group, this is probably one of the stocks you'll want to own. It's just really early right now. But given what I'm seeing in utilities overall, I think that this one could be a buy, but it's a higher risk buy than some of the others we've looked at because those EMAs are configured negatively. And like I said, even though the PMO is moving up, there's still internal weakness that hasn't been squared away yet. But
XOP.
are we moving on?
Yeah, I'm sorry.
Okay.
I thought you were finished.
All right. XOP, ooh, I don't like that PMO topping beneath the signal line, nor do I like that big bearish engulfing candlestick. But I don't see any reason why necessarily to get rid of this one. I would say tightening the stop would be not a bad idea. But this is in the energy area. It's time for a little bit of a pullback. Crude oil still looks really good. So I don't know that I'd necessarily need to sell this one, but I might wait around to get a better buy point to get in it. It's time for that area. Energy, we just saw, made new all-time highs. It still looks very strong under the surface. This one just looks like it needs a little bit of a pullback before you could get in now, but I think you would be served well to wait a little bit longer and see how this gets sorted out.
Okay, we've got 3 minutes left. BIVI.
Nice move here. This is a very low price stock, high risk, obviously very high reward. But look at that candlestick today. That, we got the big move. It looks like it's doing something nice. I know that I've seen similar things in the marijuana stocks. I would be very careful here just because it is low price, but just technically speaking, it looks pretty good. But this candlestick tells me I don't want to enter this. There's something going on under the surface here, and I don't like it. Plus, I'm not really into those high risk kind of positions. Look at the EMAs. They're negatively configured. That's a high risk play right here.
ATNM.
All right, a pharma here, really nice move, 13% move up for Actinium. That's really interesting. PMO looks good. This looks like a pretty solid rally, but I am guessing it's pretty extended. Yes, this is very parabolic. I think getting in now, you're at risk for a big pullback on profit taking, I would say. I don't know that I'd be wanting to enter here based on the 5-minute chart. I think I would want to wait and see if we can't get a little bit of a pullback. This is just an awfully big move, and there's going to be some profit taking.
Okay, we have a minute left, a minute and 20.
Mm-hmm.
DVN.
Here's an exploration and production, big bearish engulfing candlestick, PMO topping. These are a lot of weak looking charts here from energy. So it does tell me that a pullback seems to be in play going on with a lot of these stocks in energy. So Might be time to tighten those stops. Like I said, I still think crude oil is going higher. We were talking about drilling being stopped in in Alaska. That's going to bring up some prices on oil and gas. But right now it got really hot. It's time for it to pull back. I would be tightening my stop up to below this support level. I don't think I'd be entering just yet.
30 seconds.
Okay. I think we should end it here. And that is all we have for the Decision Point Trading Room. We welcome you to come to our website at DecisionPoint.com. We do run a free 2-week trial. All you have to do is use coupon code DP trial and the number 2, and you will get 2 free weeks to try us out and see what you think of our bias tables and our diamonds in the rough stocks. That's all we have. Good luck and good trading.